Hey guys, it's Andy from MagooInvesting. Happy Wednesday. In today's video, I kind of wanted to talk about some places I'm looking to invest in the stock market at this point, with how choppy the market's been. Monday, we were down 7%. Tuesday, we were up 5%. Wednesday, we're back down 5%. And so with all of this choppy trading, I thought it's important to kind of look ahead and start making a plan for when things do start to stabilize, where you're looking to take advantage of these incredible sales in these companies. It's pretty much every company is on sale at this point. And while I don't think that the market's going to stabilize anytime soon, I'm kind of planning ahead. In this video, I wanted to talk about 4 different stocks that I'm kind of looking at in the future. They all have different requirements for me to warrant taking a position in them, and I'll talk about those before I get there. The first one I want to talk about is something that if I had to take a position in a company right now, this is the one I'd pick. The next 2 are going to be if I expect the market to continue to fall and we might hit a recession. And the last one is if things start to look better. We have coronavirus starting to go away, world economy starting to look solid, and this company can get it together. That's going to be my biggest play. It's going to be the most risky, but I think it will have the largest payout. Before we get started, I got to say that I'm not a licensed financial advisor, and I highly recommend talking to a professional. Someone can find you the best places to put your money going forward. In addition, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. In that last video, I talked about cruise stocks and kind of why I thought they might be the best deal in the stock market just for that overall sector. I picked them out because travel stocks have been hit particularly hard, but cruise ships have been a lot in the news recently, talking about virus outbreaks for coronavirus on those ships, and they've been hit harder than a lot of things. But those are companies that I would not be willing to take a position in for a while. If I had to pick a position right now and someone put a gun to my head and said, you have to click buy on one stock, which one are you picking? The one I'm going to be picking is Microsoft, ticker symbol MSFT. Being one of the largest companies in the world, being a part of the $1 trillion club, or they used to, we'll have to see if they still are, but it's one of the largest, most recognizable brands on the planet. And when you're looking for something that you have to take a position in, I've mentioned how blue chip stocks are always a great option. After a strong start to 2020, the company's only down 4% year to date. And while that doesn't sound like that much of a discount, that kind of means that it has a lot of protection from the overall market. It's shown that it can do very well during the beginning of the year, and it's still kind of holding its head above water compared to the rest of the market. And that's the reason why it's a stock that I feel very comfortable owning through these very difficult times. When I talk about stability, when I throw up the 6-month chart, you can see how stable the increase has been. The beginning of 2020 was fantastic, and now you've seen it fall. And that stability is kind of the reason why I would want to take a part in this stock. Blue chip stocks are often the first to kind of rebound after tough times in the market, and with how well Microsoft has proven that it can run its business over the past couple years, it's something I'd feel comfortable holding during this very kind of scary time to be in the market. One of the most attractive parts about the company, which I talked about in my breakdown of Microsoft, is the fact that they have revenue sources from 3 different areas, and it's very spread out. When I put up the different revenue sources right now, you can see that the 3 largest parts of their company make up around 1/3 of their revenue for each one. And when you're looking at building a portfolio, one of the things that people talk about is diversifying your portfolio. And the reason you do that is because if things are going well, your portfolio is going to do fantastic. But if bad news comes out about your single company, it's going to tank your account. And for Microsoft having 3 different main revenue sources, if one of them gets hit during this tough economic times, the other 2 can kind of boost up the bottom line of the company, and the revenue sources are not going to suffer as much if you invest in a company that's very set on one type of business or one type of product. If something happens to the supply chain or the overall demand, the company's going to hurt. And I think that the 3 different revenue sources for Microsoft gives you enough protection during this economic time. When I put up the revenue chart from the past decade, you can see that even during times of economic turmoil during the financial crisis of 2008 and 2009, you can see that the revenue dipped just a little bit, showing that, in my opinion, I think that it is a pretty good bet against a slowing world economy. And so since it's shown that it can handle tough times, it makes me confident to kind of take a position in it, even when things do not look very certain right now. In addition, I'm not sure how true this number is, but it says that they have $133 billion in cash on hand, which is a ridiculous amount of money. So even though maybe their revenue may drop a little bit, it appears like they have enough cash on hand that it's not going to have any long-term damage to the company. And that's the reason why if I had to pick a company to invest in right now, I'd be picking Microsoft. All right, for the next 2 stocks, I'm going to paint a scenario. And that's a scenario that you do see a recession coming and coronavirus isn't going away anytime soon. And you're wanting to take advantage now. And not wait until the dust is settled. You want to take a position in the upcoming future as things are starting to head down. The first company I want to talk about for this is Coca-Cola, ticker symbol KO. In my Safe Stocks video for if you see a recession coming, I mentioned stuff like defense stocks and healthcare. But one of the sectors that I kind of missed out on is consumer staples. And if you think about Coca-Cola, it is a consumer staple product. When you think of recessions, you think about people skipping out on the big time purchases, maybe stuff like cruise ships, which I talked about in the last video. And the reason why I talked about cruise ships is I thought that it's a fantastic opportunity if you don't see a recession coming. Coca-Cola will not be hit that hard if a recession does come because most people are willing to cut out cruise ships, but they're not as willing to cut out their daily Diet Coke or Coca-Cola. During times of an economic recession, everything's going to get hit pretty hard. I believe I see enough in that company that I'd feel comfortable holding during tough times. And one of the main reasons I see that is because of its really low beta. Currently, Coca-Cola has a beta of 0.4, meaning that if the market goes up or down 1%, you expect Coca-Cola to go up or down 0.4%. It'd be like two different people jumping out of an airplane. One person has a parachute and the other doesn't. One's going to hit the bottom way faster than the other, and Coca-Cola is the one that's jumping out with a parachute. A 0.4 means that it's not going to be dropping as fast as the overall market. This also means that if things start to get better, you're not going to get incredible returns with a company like Coca-Cola, but that's never the reason why you would take a position in something like this. It does have a dividend of around 3%, which will be very nice. Cash flow during tough times is fantastic. Everyone likes getting money in their pocket. Having an increasing dividend, like you see in Coca-Cola, just kind of gives an extra reason to trust a company like Coca-Cola. There have been some news stories recently talking about some problems finding their artificial sweetener for Diet Coke, but I think that's just kind of media taking a funny sounding story and less of a overall business problem. So I'm not that worried about that. Also, the company's only down 6% year to date compared to the rest of the market, so that kind of shows the beta in action. Coca-Cola has not fallen as fast as the rest of the stuff, and that's kind of the reason why you take a position in this stock. Okay, the next company that I would consider looking at if you do think that a recession is coming is Lockheed Martin, ticker symbol LMT. When you talk about things that don't change depending on where the economy is, that's defense stocks. Lockheed Martin is the largest defense contractor in the world, and having the United States government as one of your main clients, the US government is very good at spending money that they don't have, even if it's during poor economic times. And that's kind of the reason why defense stocks are considered a safe haven during economic recessions. When I put up the 1-year chart, you can kind of see the discount that you'd be getting. It's currently sitting down 10.5% year to date, which is pretty close to the overall market. So I'm not saying that it's going to be something like Coca-Cola is not going to fall as far. When you look at it, the beta of Lockheed Martin is around 0.9. So as the market falls, Lockheed Martin's going to similarly fall. However, you're not going to see a lot of problems that some other companies are seeing. When you have news events coming out talking about supply chain problems, you're not really going to see that with a company like Lockheed Martin. The way that they sign contracts, they're long-term deals. So they have guaranteed revenue coming from the US government or whatever other company that they've signed with. So you have stability in that aspect. And that's kind of the reason why defense stocks are considered a safe haven during poor economic times. As I've mentioned in prior videos, when things are not going that well or you don't feel super comfortable about a sector, it's often a great idea to invest in the sector leader. As I mentioned, Lockheed Martin is the largest defense contractor on the planet, meaning if you wanted to pick the world leader, you're going to want Lockheed Martin, ticker symbol LMT. Also, it gives a 2.5% to 3% dividend, which is similar to Coca-Cola, and it just kind of gives you an extra benefit of owning the company during this tough time. This final stock that I'm talking about, I've talked about a bunch of times prior. It's actually in my top stocks of 2020 video. I would only consider taking a position in this company if 3 different things happen. 1, the market continues to fall, it starts to rebound, and coronavirus goes away in the relatively near future, maybe a couple months. And the other thing, we're talking about Boeing, by the way, and the other thing, I would need these 737 MAX planes to get off the ground. And before you kind of click off this video or you go to the comments section and be like, oh man, you're talking about Boeing, what's up with you in that company? I've talked about Boeing because I think it's a fantastic opportunity. And when you look at the company today, whew, that's a tough day. But what does a tough day mean if you're not an investor? It means you're getting a great discount. This is probably the largest discount I've seen on a Dow Jones company in a while. Being one of the 30 largest companies on the stock market, you kind of get held to a higher standard than a lot of other things. And so seeing a company that's in the Dow Jones being down 18% is kind of shocking to me. Boeing's problem started way before this whole recent coronavirus thing broke out. It goes back to the 2 crashes that they had with their 737 MAXs, all of the problems associated with that. They thought they were going to get their planes off the ground. They didn't. They've had some more problems. People are not buying any more of their jets, and they are in a tough spot right now, which kind of makes sense with the 19% down that they are today. But when you look at the industry overall, the other world leader in this sector is Airbus, and they are seeing similar problems as well. So it's not just a Boeing thing, it's just the overall sector. Boeing got hit by really tough news today when they announced that they were going to take out a $13 billion loan to kind of protect themselves from any turmoil that they see in the upcoming future. And that's kind of the reason why the stock tanked. People don't like hearing that they're bracing for the worst, which is very possible. That's why I'd say I'd only take a position in this stock if 3 things happened. Coronavirus goes away in the next couple months, the world economy starts to go on the uptrend, and then finally the 737 MAX planes get off the ground. If all 3 of those things happen, this is a stock that I anticipate will be a large portion of my portfolio in the future. But I think it's kind of unlikely that all three of those things happen at the same time. I do think that it's kind of interesting to think about the fact that the 737 MAX planes are not able to get off the ground. And during that time where the kind of economies are stalling around the world, it's giving Boeing time to hopefully fix those problems. And if they can time it right where they can get those planes off the ground around the same time that the coronavirus fears start to go away, I think this will kind of catapult them back up a little bit. Obviously, they're down around 50% in the past 6 months. Not fantastic. But if you can see these things working out in their favor, I think this is a fantastic opportunity. I'm sure a lot of people would not think the same way. Maybe they're heading towards bankruptcy, all these things, but I think this is an American company that will survive. It's been around for a long time. They're one of the industry leaders, and I think this tough time will kind of have them rethink their business, rethink their management, and improve in the future. And that's kind of a business that I want to be a part of. However, I do think things are going to get worse before they get better, but that's just kind of part of it. I mentioned the three things that I would need to take a position in the stock, and until then, I'm just going to kind of watch it. That's the whole point of this watch list, is I'm not looking for something to buy right now, except for Microsoft, if someone put a gun to my head and told me I had to. But for Boeing, that's just something that I'm going to continue to watch, because as more information gets released about the world economy, coronavirus, and how Boeing is handling things, it gives me a better picture of the overall status of the company and how comfortable I should feel by taking a position. So it's something I'm going to be watching in the future, along with these three other companies, but Boeing is kind of the one that I have my eye on. During the times when they had the crash problems, the stock did not fall that far. When I looked at it, I saw these horrible news stories, and I just kind of assumed it would fall out of the sky. I get it, because it's a plane. But it hasn't really. It's been relatively stable, which is kind of something you'd expect for a massive company like Boeing that's part of the Dow Jones. But now these news from the economy and the loan that they're taking out has really pushed the stock down, and I think it's something you can potentially take advantage of. So in this video, I talked about 4 different stocks that I would consider looking at during different opportunities. I would look at Microsoft for pretty much any time. I think this discount that you're seeing right now is pretty decent. I do think the market's going to fall further, but if I had to take a position right now, Microsoft would be my one. And then the next two, I talked about Coca-Cola and Lockheed Martin, ticker symbols KO and LMT. These are two companies that I would consider taking a position in if you think that a recession is going to be coming relatively soon. I mentioned the protections that they give with the low beta from Coca-Cola, the consumer staple that it has, and Lockheed Martin, while it does have a relatively high beta compared to Coca-Cola, it has the safety and the fact that it's a defense stock that's getting contracts from the United States government. And then finally, I talked about Boeing, which is going to be my home run play. There's a lot of things that have to go right before I consider taking a position in there, but things are starting to set up kind of where I'm seeing a lot of benefits of the company. Obviously, it's in a really tough spot, and it's going to take a while for them to recover. But if all those three things happen, I think this may be a fantastic opportunity. So these are companies that I'm going to keep on my watch list. At this point, I'm not going to buy or sell any stocks. I'm just kind of watching the market overall to see what happens. So let me know what you guys are watching. Let me know what you thought about my 4 stocks on my watch list in the comment section down below. Thanks for watching. I'll see you in the next episode.